Terry Savage is a Chicago Sun-Times syndicated columnist. Terry, great to see you. Thanks for joining us this morning. This is important stuff. And Mark Zandi is with Moody'sEconomy.com. The same to you, Mark. Thanks for being with us. You know, I'm not asking either of you to sort of out-doom and gloom other analysts here, but I am really interested in bottom lining this and you guys giving us an honest assessment of this. How bad is this sector right now, the housing sector, and we can break it down and maybe talk about financials in a moment. When we're talking about home builders, retailers, those retailers selling big ticket items for homes. We're talking about refrigerators, washers, and dryers. Terry, let me start with you. How bad is it right now?
Well, it's pretty bad, and there's no indication that it will get better. In fact, plenty of indication it'll get worse, because every one of those 900,000 homes in foreclosure means that some family, some individual is really in trouble. Then the bank forecloses, they put the house on the market and sell, and they'll sell for any price just to get as much money as they can. That devalues the value of every other home on the block, or the home sits empty, and that really is bad for the neighborhood. So it spreads. Not only does no one go out and buy a new house and a new washer and dryer, but people who weren't even thinking of selling are going, whoops, I better not go out shopping for new clothes or a new car. And it's a vicious cycle downward, just like we saw the boom times upward.
Yeah, Mark, what are your thoughts on this?
Well, it's about as bad as the housing market as we've ever had. House prices, which are the statistic I think most of us are focused on, are down 10% from their peak, which was over 2 years ago. And as Terry points out, there's no sign of any stabilization. Things are getting worse, and prices will fall further.
I'm curious, as we look at this issue and we think about the financial sector, you know, we all have mortgages. Most of us certainly do. We all work through banks. And I'm wondering, what help is there on the horizon for the financial sector that's taking a big hit in this area as well? Ben Bernanke, the Fed chief, says that there's more that needs to be done here. So, Mark, I'm curious, what do you see on the horizon here, and do you see anything out there that suggests that the financial sector that we all count on here might be rebounding in this area sometime soon?
Well, lower rates. The Federal Reserve has slashed rates, and they're going to cut rates further in the next few weeks, couple of months, and that is going to help a little bit, but I don't think that's enough. I do think Congress and the administration are going to have to become more aggressive in coming up with a policy response to try to help out the mortgage market, the housing market, and keep more people in homes.
Terry, more aggressive action needed, and what's the government to really do? The government has offered up a couple of plans already.
All right, well, here's the problem. If you're a homeowner out there and you see these statistics, and you weren't the speculator that was trying to get rich quick, you're a homeowner and you want to keep the roof over your head, and you can't make the payments because they've gone up, or you've lost overtime or your job, there is no real help right now. You call, everybody says, well, call your lender. The lenders don't want to talk to you. The servicers tell you, oh my gosh, your loan has been sold, there's nothing we can do. They have to foreclose when you're 90 days late. Even this vaunted Help Now Alliance is really a toll-free number that is put out by the financial services industry to take you to counseling, which delays resolution of the problem. So the real talk here, Bernanke's admitted, we can lower rates, we can put money into the economy, Congress can give you a rebate. It's not working. Well, even conservatives, well, there's a proposal now that's about to surface. It's sort of in Congress now. Senator Dodd has proposed it. The American Enterprise Institute, conservatives who don't want government interference, they've written a report, Alex Pollock, saying, you know, in the 30s, there was something called the Homeowners Loan Corporation, a government-backed agency when, at that time, half of mortgages were in default, half of them in the 1930s. They went out and bought mortgages. They made new loans to people at lower home values. The lenders had to take a sort of a write-off. They weren't happy with it either, but it got the mortgage market going, and there are some new versions of that being introduced in Congress to get the government sort of in the middle of this. It doesn't please anyone, but it would be something that would get the problem going now.
Okay, when we come back, we're going to take a quick break. When we come back, I want to focus a little bit more on the idea of interest rates. More good advice about a tough topic, foreclosure. Terry and Mark staying with us. We're back after a quick break. The nation's housing crisis, how it is hitting home and how you can fight back. We want to continue our look with two financial gurus. Terry Savage is a Chicago Sun-Times syndicated columnist, and Mark Zandi is with Moody'sEconomy.com. Again, thanks to both of you this morning. Terry, let me start with you. Do you think we're going to get another round of rate cuts from the Fed this month? And is there a chance that this round, if we get it, will actually impact the benchmark 30-year fix? It seems that the most recent cuts have really benefited banks borrowing money from other banks.
Yeah, I think the Federal Reserve is going to cut interest rates. They may even cut them 3/4 of a percentage point when they meet a little over 10 days from now. I think that should begin to help mortgage rates, but you're right. They're being very stubborn. There's a lot of concern in credit markets about credit risk, and therefore those rates aren't coming down. But I think with time they'll start to come down, and people with good credit histories and a down payment and a good solid job, they should be able to get a reasonably good mortgage a couple months down the road.
Well, Terry, what do you think? Another rate cut coming? Will it be helpful?
2 points about that. The Fed can cut short-term rates, but America owes $9 trillion around the world, and those people who buy our debt are saying, what do you mean you're lowering rates? We don't want your dollars anyway. And look at what's happening. They're selling dollars and buying gold, buying the euro. So the Fed's a little constrained. They can cut rates, but mortgage rates and long-term rates are set out there in the bond market where they are selling dollars, not trying to invest in the dollar. That's number one. Number two, the real problem for so many people is that even with lower mortgage rates, they can't get a new mortgage because they have no equity. For my column, I was talking to the head of Consumer Credit Counseling in Nevada. She said the median home price there is down $75,000. It was over $330,000. And 95% of the people that come in for credit counseling owe more than their house is worth. So we're in a logjam here. They can lower rates. They can push money into the banks. The banks are scared to lend, and consumers have no equity or down payment. And that's a real... Well, that's a crisis building.
Wait a minute. So what do? You've got this situation here, and perhaps you're one of the people who was looking at a reset on one of these, it feels so gimmicky now, one of these ARMs, 2-year ARMs. You got a low teaser rate, and then 2 years later, you've got this reset coming, and that rate, who knows where that's going to end up. So, Mark, help me, help folks. What do?
Well, you know what I would do? I would call my lender and ask about an FHA loan. As part of the last stimulus package that was passed, FHA now has more authority to make bigger loans to people, and they're able to make loans to people that are under some distress, that have delinquent loans, don't have much in the way of a down payment, if any at all. So that's where I would go first. I go to my lender and say, can you help me with an FHA loan? Do I qualify? If I don't qualify, what do I need to do so that I can get that mortgage down the road?
Terry, is that good advice?
Yeah, the toll-free number for that program is 800-CALL-FHA. And then, of course, Consumer Credit Counseling is now gearing up to help you. That's 800-388-2227. Those are on the home page at terrysavage.com. The lenders is a problem. The practical problem is you get caught in voicemail hell. It's dial 1 if you want to make a payment, dial 2 if you would like a statement. And it's very hard to get someone at either the lender or the servicing company to help you. You have to be very persistent. And in most cases, when you're behind, they can't help. And if you have no equity, they can't help. That's why you need to be routed through consumer counseling. And that's why the government needs to act.
Yeah.
See, I always think the government makes a worse mess every time it tries to fix a problem. But somebody has to step in here and say, okay, lenders and the people who bought these securities, you're going to have to take a loss. Homeowners, you're going to have to, we don't want to foreclose you. It's a big problem for America. We'll lower the amount you owe. We'll give you a rate and a payment you can afford, and we'll get the system working again.
But then the other side of it, and I'm so out of time, the other side of this is that we don't like the idea of a bailout for folks, for financial institutions and individuals who should have known better and didn't and made these bad, all right, I got to go.
Exactly, and it's not fair to the people who are paying on time.
Yes. Mark, Terry, great conversation. Good to talk to you. Thanks for your time this morning. Appreciate it.
Thanks a lot.